Assalamualaikum, my name is Nurul Najihah and our group 6 will present our term paper related to Sharia framework for Islamic Financial Institutions, specifically in Maqasid Shariah.
So, what is Maqasid and what is Sharia? Maqasid is derived from the word maqsid, which brings the meaning of purpose, objective, intent and goal. While some scholars define the term Sharia as strictly adhering to Allah's rulings of the Islamic way of life. And as a whole, Maqasid Shariah support humanity's overall well-being and guarantees that the environment complies with Sharia demand, which include all disciplines, belief, and act aimed at safeguarding human interests in all parts of life. So in this paper, we will discuss the Maqasid Shariah in Islamic Financial Institutions, the application of legalism in Islamic Financial Institutions, and analysis of case study on Sharia government framework in bank in Bangladesh. We already know the meaning of Maqasid, so we should also know that Muslim scholars divide the Maqasid Shariah into three categories, which are Daruriyat, essential, Hajiyat, need, and Tahsiniyat, embellishment. The first category of Maqasid Shariah is essential, which are also known Daruriyat. It could cause chaos if the society neglects this principle, as the essential will cover the maslahah of the society as a whole, because it is divided into 5 important essentials, which are preservation of faith, preservation of life, preservation of lineage, preservation of wealth, and preservation of intellect. All this value is essential to ensure a functional society and well-being of individuals. There are many studies and approaches advocating for implementing Maqasid Shariah in Islamic finance, which result in many analysis and suggestions because of the relationship between Maqasid with the Islamic economy, banking, and financial market. According to Dusuki and Abdullah 2007, Maqasid Shariah should give ethical guidelines to guarantee Islamic financial organization, promote social welfare, and meet the requirement of society rather than being exclusive profit oriented. And because of several important reasons, it is critical to emphasize the realization of Maqasid Shariah in current Islamic finance section. The importance of the Maqasid Shariah in Islamic finance stems from the Islamic legal stance on wealth. This significance is due to the objective of financial Islamic law and commercial transaction and overall goals of Sharia in wealth. The reason is that if the objective of the Maqasid Shariah are abandoned in any business transaction, injustice may occur and lead to poverty and anarchy, because Maqasid Shariah stress the preservation of wealth and encourage socially responsible activities in the society. One of the most pressing concerns in the Islamic banking industry today is the development of Sharia-compliant product that is offered by the Islamic Financial Institution, while maintaining the significance of business quality of being competitive, lucrative, and viable in the long term. But there are various difficulties that must be addressed, such as determining whether a product is Sharia-compliant or not by choosing the most genuine method in fiqh that is permissible in Sharia standpoint. And the verses of the Quran and Hadith literature that are discussed is general rather than very comprehensive in detail. And by using Maqasid, several instruments are available under fiqh muamalat, including exchange contracts such as buy, ijara, istisna, and salam. And all of these following contracts offer possibility for bank to gain profit in financial transaction while following the Sharia rule, because Islam allows profit for the entrepreneurs to recompensate for their hard work. And it is important to realize that Maqasid Shariah should not be used in Islam simply to allow something that is haram and prohibit something without any legal stance. A well-established Sharia governance framework is essential for a complete regulatory and supervisory infrastructure. The Islamic Financial Services Board defines Sharia governance framework as the combination of institutional and organizational framework, which IFI maintain effective independent monitoring for Sharia compliance. The Sharia board function may be divided into 2 categories, at macro and micro. At the macro level, they play important roles in harmonization and acting as the highest Sharia authority. And in the micro level, the Sharia board has responsibility such as participating in product development and structuring activity and approving Sharia matters. Despite the fact that Islamic financial institution has been around for half century, they are still regarded as newcomer in financial market when compared to the conventional counterparts who have been around for more than 4 centuries. Hence, the Maqasid Shariah is being realized in the governments of Islamic financial institutions in order to support the viability of the Islamic financial institution. And secondly, if we recognize Sharia governments in Maqasid Shariah is to foster transparency. Promoting transparency in all financial dealing is a part of the specific Maqasid Shariah in finance. According to this principle, all dealings and transactions must be carried out in a transparent way, and all contractor parties must be aware of them.
I am Ainazira binti Baharuddin, and next I will proceed to explain the legal maxims. Firstly, I will generally explain the definition of legal maxims. So, legal maxims of Islamic law are the general rules of Islamic jurisprudence that describes Shariah's purpose and objectives. Generally, maxim is a rule that applies to all of its relevant particulars. In addition, there are 5 leading maxims mentioned in the studies, which are: first, matters are determined according to intention, which means the act of humans should come from his will and intentions. Second, is certainty is not overcome by doubt. It can be understood that certain things cannot be replaced by mere uncertainty, but they can be replaced by the same certainty. Third, hardship produces facility, means if it will bring hardship, it is necessary to reduce the burden and to disregard restrictions in exceptional circumstances. Fourth, is injury must be removed, which refers to intentionally causing injury to others, whereas it also can be known as people who also intentionally cause harm to others without regard for the law. Lastly, custom is a basis for judgment, which is not a strange thing that a large majority of individuals or society are aware of, such as word, action, and abstinence. Okay, next I will proceed to explain the application of legal maxim in Islamic financial institutions. Generally, the goal of Sharia law is to ensure that individuals who enter into contracts, whether financial, business, or social, will receive justice, as it is important things that focuses in Islam. Besides, the principle of maxim is particularly relevant and in accordance with Islamic finance, since it can be used as a fair alternative to interest-based financing, which is rife with injustice. Hence, Islamic Sharia is the guidelines for the Islamic banking and finance in all aspects, in terms of rules as well as principles. There are 6 legal maxims that are applied in the Islamic banking, which are: firstly, in contracts, attention is given to the objects and meaning, and not to the words and form. Generally gives the understanding that the legal status of a transaction is determined by the transaction's underlying purpose and goal, as well as it refers to this principle in contract interpretation. Applied to the Islamic finance institution, suretyship involves a guarantor's coextensive liability, whereas debt transfer entails the principal debtor's discharge. Even if it is referred to as transfer of debt, a contract for the transfer of a debt with the requirement of maintaining the debtor accountable if the transferee unable to repay the debt is considered a suretyship. In addition to that, a contract of suretyship will be treated similarly if the principal debtor is dismissed after the contract of surety is signed. Secondly, necessities make forbidden things canonically harmless, indicates that in severe circumstances, forbidden things can be tolerated if there are no other option. The application in Islamic banking and finance of a contract of sale must identify the quality and nature of the good being sold. Otherwise, the deal will be considered invalid. Certain commodities, on the other hand, cannot be ensured in terms of quality without risking damage. Thirdly, move to severe damage is made to disappear by a lighter damage, which the essence of this maxim is that if harm is required, one must accept the lesser of the two damages. In addition to that, the maxim points out several crucial options for enduring a slight harm in order to avoid a serious harm. In the context of government intervention in the economy, this maxim and its highly associated inevitable consequences can be implemented. To add, The objective of this rejection, according to all of the scholars, would have been to prevent unfairness in the seller's right to profit. Next, I move to the other legal maxims, which is when the receiving of a thing is forbidden, the giving of it also forbidden. The maxim and its application apply not just to financial transactions, such as the taking of interest and unlawful fulfillment, but also to non-financial transactions, such as those connected to professions that are forbidden in Sharia. Moreover, if the banks and insurance companies enable them to do so and do not regard this as a serious issue for Islam, it will have an impact on the general community, either directly or indirectly, because the available money will circulate, causing people's earnings to be mixed with interest. Fifth, reward begets risk. This maxim states that no person can expect to make a profit without accepting a loss or risk in his efforts. Besides, the example of the application that usually used in Islamic banking and finance is, according to the studies, it can be known as a sale of contract, which people always know that actually no sale in Islam is free risk. Profits that gain from the sale is the result of taking a risk in order to ensure that there is a market for the good, that the price is reasonable, and that condition of the goods are the best. Lastly, what is permissible in law cannot be a cause of liability. The issue of advantage against liability is covered by this maxim. It indicates that if a law allows one party to engage in certain actions, the former cannot be held responsible for compensating the latter if the latter suffer a loss. In addition, to apply it to Islamic banking and finance, an Islamic government offers citizens with the best possible infrastructure, builds them for irrigation and energy, devaluate or revaluate its currency in the national interest, and implements development projects for the benefits of its people. Okay, now I will proceed to the issue of legal maxims in Islamic banking and finance. One of the issues usually discussed is about the differences in thought or ideas among scholars. According to the studies in Islamic banking and finance class and textbook, most of the academic disciplines, experts will agree on the foundation but dispute on the specifics. It is because when it comes to the efficiency of various treatment choices, experts are not all on the same page, and thinking which will lead to different opinions that will arise any contention in giving any thoughts, especially on the legal maxims knowledge, that is the application on the Islamic finance and banking. However, the academics study the Quran and the Sunnah, then they will go through the same procedure. For example, by al-inah contracts. There are a majority of other scholars who disapprove by al-inah contracts, which the implicit or real purpose should be considered when determining the legitimacy of a transaction. However, Shafi'i schools claim by al-inah as permissible contracts, which the proclaimed intention, not the implicit or real intention, should be used to determine the legitimacy of a transaction.
So, I will proceed with a case study of Islamic bankings in Bangladesh according to an article written by Alam et al. 2019. In 1983, Islamic Bank Bangladesh Limited, or known as IBBL, was the first bank established in Bangladesh. The successful operation of IBBL influenced the establishment of other Islamic banks and Islamic financial institutions in Bangladesh. Now, there are 8 Islamic banks and 90 Islamic banking branches. Each Islamic bank in Bangladesh has developed its own Sharia governance from the beginning. This is because Bangladesh does not have a separate law or regulation authority to control, guide, and monitor the Islamic banks. Since the central bank does not have a Central Sharia Supervisory Board, CSSB, the Islamic Bank in Bangladesh was formed their own Sharia Supervisory Board, SSB, and participate in the discussion related to approval of the new product. However, some Sharia supervisory board approve the financial products, but another SSB rejects the product because of different type of schools, which sometimes lead to confusions among them. Moreover, the uniqueness of the Sharia governance framework are efforts from general people that have been developing and improving the Islamic banks and financial industry. The SSB supervises the banking and Sharia-related problems of Islamic banks and financial institutions, but not responsible for Sharia compliance in connection with Bangladesh bank policy. We move on to the issues of Sharia governance in Bangladesh. The main challenge is no mandatory guidelines from Bangladesh Bank that must be followed, as there is no official approval of Centralized Sharia Board of Islamic Banks (CSBIB) by Bangladesh Bank. So, it is not an obligation for Islamic banks to follow CSBIB's decisions. It is also because knowledge of Islamic finance and banking are limited among Sharia scholars in Bangladesh. There is insufficient government support for development in the Sharia governance system. Muhammad Farooq and Asma 2017 mentioned, the rules and regulations of conventional banks are flexible, but not for the Islamic banks. This can be seen when limited license apply to Islamic banks but not the conventional banks. The issue continue with lack of effort on promoting Islamic banks. Islamic banks in Bangladesh are growing due to overwhelming reaction from the public. Unlike in Malaysia, the government does support their Islamic banking operation. Last but not least, none of Bangladesh Islamic banks is fully compliant with ALFI Sharia governance system. This is because no one at the audit and governance committee level is responsible for the implementation. However, Sharia auditors and muraqibs partially fulfill their obligation in auditing, but the reality is there is a lack of Sharia audit. Considering the issues and problems, it can be analyzed that strengthening Sharia governments and minimizing fraudulent behavior of Sharia principles application among the Islamic banks in Bangladesh can be done by promulgating a separate and comprehensive law for Islamic banking operations by the Bangladesh government. Moreover, since Islamic banks in Bangladesh do not have specific regulation, CSSB is required to minimize the disputes in current Islamic banking practices in Bangladesh, where they have authority in monitoring and overseeing the SSB along with the general application of Sharia principles. To add, Bangladesh banks needs to show more support in Islamic banking regulation instead of following the public response. Lastly, to achieve efficiency, qualified Sharia scholars can be born from such a program like seminars or workshops that need to be held by Bangladesh Bank to improve the banking knowledge among top management and employees, which is aligned with.
To summarize, the Sharia governance must apply the Maqasid Shariah in the Islamic framework because of the importance of Maqasid Shariah and its influence in Islamic finance, legal maxim, and the analysis of case study in Bangladesh.